Can inflation really drive gold prices through the roof?
That's exactly what experts like Peter Schiff and Steve Hanke are predicting.
In this video, we've condensed their deep insights into quick, digestible summaries.
So stick around. David Lin reveals how the housing market is changing before our eyes.
And remember, these insights are designed to keep you informed and ahead of the curve. Welcome. Today, we're examining the recent analysis from the Crowded Market Report, focusing on the Dow hitting all-time highs and the silver rally.
The report highlights the factors pushing silver prices up and discusses the implications for investors.
The Crowded Market Report suggests the Dow's remarkable performance is tied to robust corporate earnings.
Furthermore, silver's price increase is supported by growing industrial demand and a positive outlook from investors.
The Crowded Market Report states that the Dow's ascent to new highs reflects strong economic recovery.
This rally indicates heightened investor confidence, driven by improving economic indicators.
According to the analysis, silver is rallying as investors view it as a safe haven.
Industry demand for silver, especially in solar panels and electronics, is also pushing prices higher.
The report indicates that palladium is currently signaling short-selling opportunities.
Market forecasts suggest potential corrections may be on the horizon for this metal.
Forecasts suggest the Dow could continue its upward trajectory if earnings reports stay positive.
As for silver, the analysis hints at stabilization once supply can catch up with increasing demand.
The Crowded Market Report concludes that investors should closely monitor future earnings reports for the Dow.
Additionally, trends in silver and palladium are crucial for making informed investment choices moving forward.
Today, we're examining an analysis by Peter Schiff on gold's breakout and the ongoing economic challenges in America.
Schiff's insights reveal that the current inflation concerns are pushing investors towards gold as a safe haven.
Peter Schiff suggests that inflation will likely lead to a significant increase in gold's price.
He also points out that the economic bubble, especially in the housing market, can lead to severe market corrections.
What does Peter Schiff say regarding inflation's effect on gold?
Schiff notes that high inflation typically drives demand for gold as a hedge against currency devaluation.
How does Schiff view the current housing market?
He believes the housing market is inflated and that rising interest rates could lead to significant corrections.
What predictions does Peter Schiff make regarding gold?
Schiff anticipates that gold prices could soar, particularly if economic challenges persist.
What does Peter Schiff predict for gold as we head into 2025?
He predicts that uncertain economic conditions will lead to a surge in gold investments.
Peter Schiff emphasizes that investing in gold is becoming increasingly important as economic conditions evolve.
He suggests that investors should diversify their portfolios to include gold, especially given the potential for market volatility.
Monitoring the housing market and economic indicators is also essential for making informed investment choices.
Schiff's analysis calls for a cautious approach as we navigate these economic challenges.
In today's episode, we discuss economist Steve Hanke's predictions about rising prices and potential job losses in 2026.
Steve emphasizes the need for timely action from policymakers to combat these economic issues.
According to Steve Hanke, we can expect high inflation rates and a notable reduction in job opportunities by 2026.
David Lin stresses the importance of a proactive approach from policymakers. Steve warns that if inflation remains unchecked, prices could rise to levels that strain consumers' budgets.
What are the implications for everyday expenses?
Families might find it increasingly difficult to manage their finances. Hanke's research suggests a considerable drop in job openings, especially in at-risk sectors.
What does this mean for recent graduates?
They may face tough competition with fewer available jobs.
What are Steve Hanke's predictions for the economy in 2026?
He envisions a troubling economic landscape marked by high inflation and a shrinking job market.
Steve Hanke underscores the critical need for decisive action from policymakers to tackle inflation and job losses.
Additionally, families should reassess their financial approaches in light of these developments.
Today, we'll discuss the recent layoffs at Tyson and their implications for the economy.
The COO indicates these layoffs are part of a broader strategy responding to market challenges.
The COO highlights that these layoffs reflect real challenges for communities.
Indeed, job reductions could lead to decreased consumer spending, critical for economic health.
What are the broader effects of these layoffs on local communities?
The COO notes that income loss for families typically hurts local businesses due to less consumer spending.
Could these layoffs signal upcoming economic challenges?
The COO cautions that large job losses may foreshadow broader economic turmoil.
What does the COO predict for the job market ahead?
He expects short-term instability with a focus on retraining programs for impacted individuals.
To conclude, the COO believes addressing these challenges requires collaboration among businesses.
Certainly, investing in community support and retraining will be crucial for stabilizing the economy.
Today, we're diving into the findings of the NAR Homebuyer Profile Report, highlighting key insights.
The guest explains how trends are changing, particularly the growing presence of millennials in the market.
The NAR representative points out millennials now represent a large portion of homebuyers.
This demographic shift is important as it influences market preferences and behaviors.
Additionally, there's a noted trend towards urban living due to increased interest in city amenities.
The guest indicates that millennials are reshaping home buying patterns, focusing on convenience.
Does this mean there's a noticeable shift from suburban preferences to urban demand?
Exactly, as these buyers value walkability and access to services.
The NAR report emphasizes the importance of first-time buyers in market activity.
However, they often encounter challenges primarily related to meeting affordability.
What resources are available to assist these buyers?
There is an interesting shift towards urban living as convenience is becoming more valued.
Such a shift may lead to increasing property values in urban areas.
But how are the suburbs faring in this landscape?
The NAR representative predicts that demand from millennials will rise as they enter different life phases.
Moreover, urban markets could see further appreciation in prices as demand increases.
Navigating this evolving market requires buyers and agents to stay updated on recent trends.
First-time buyers should explore financing options to enhance their success.
The influence of millennials on the market necessitates new strategies for both buyers and sellers. Today, we'll explore housing market predictions from Emily Brown, as analyzed in a discussion with David Lin.
Emily notes that housing prices could decline through 2026 due to economic factors.
Emily Brown projects that housing prices might decline through 2026.
David Lin suggests that economic indicators support this prediction.
What role do rising interest rates play in Emily Brown's forecast?
Emily explains that rising interest rates lead to decreased affordability, significantly impacting buyer demand.
How does Emily describe the current state of buyer sentiment?
Emily notes that many buyers are adopting a cautious approach, delaying decisions until markets stabilize.
Does Emily address local variations in the housing market?
Yes, Emily emphasizes that while some markets may see sharper declines, others could be more stable.
What does Emily predict for the housing market after 2026?
Emily suggests that although prices could drop further, there might be gradual stabilization as the economy recovers.
Emily advises potential buyers to assess market trends carefully before making purchases.
According to David, investors might target areas showing resilience amid market corrections.
Wow, what an incredible lineup of insights we've heard today.
It's been a roller coaster. Emily Brown opened our eyes to housing price trends while the NAR representative highlighted millennial impacts.
And then the Tyson Foods COO grounded us with some harsh realities about job losses affecting consumer spending.
Right? It really paints a picture of interconnected issues in our economy.
Plus, Steve Hanke brought in that warning about an impending economic downturn.
Exactly. And let's not forget Peter Schiff's bullish stance on gold amidst inflation concerns.
Such a clash of perspectives here, agreeing on inflation's impact, but divided on timelines and solutions.
It really reinforces the idea that while we can find common ground, the paths forward are complex.
If you found these discussions enlightening, give us a thumbs up and hit that subscribe button.
Your support helps us continue providing these expert insights.
Join us next time as we explore global trade dynamics, another must-see topic.
Until then, stay informed and keep questioning.